Get to Indegene, and what a fabulous listing it's had. This is a company which provides digital solutions for businesses engaged in the life sciences, and they've had a very good listing. The stock had listed at 655 rupees per share, much higher than the issue price of 452. The gains have settled a bit. It's still holding up with a 25% gain at 568. We have Manish Gupta, the Chairman and CEO of Indegene, the newest company to be listed on Dalal Street. Congratulations and thank you very much for joining in. This is Rima here. Now that you're listed and you have a lot of shareholders to answer to, if you could give us, Manish, some indication of the kind of growth. In FY22, your top line growth was 72%. In FY23, it was 39%. And in the first 9 months of the year, growth was about 15%, 9 months of FY24. It's the growth rates, at least the historical growth rates that we have, which is about 3 years, seem to be, they're not giving us a sustainable trend. So if you could guide us in terms of what can this company grow at and what is that, investors, your new shareholders should expect on the margin front.
First of all, thank you so much for inviting me to this discussion. Thanks a lot for that. Now, as Indegene, we have had strong growth rates over the last few years for sure. But even before that, we have grown from a very small company, started out of a house in Bangalore, to a global company with more than 5,000 employees, working with all the top 20 pharma companies, 65 active customers, 18 offices across the world. So there's been secular growth over all these 25 years. While I'm not guiding to a specific number, this is an industry, the life science industry is a large industry, $1.8 trillion, north of $1.8 trillion. This is also an industry which continues to grow. This is an industry which continues to outsource more on a lot of the operational activities in which we operate in. This is also an industry, even in these operational activities, they are shifting more and more their spends and ways of doing things through digital first and AI-driven ways of doing things. And we as Indegene, by combining our domain expertise and deep tech platforms and tools, provide very unique solutions. To that extent, we are bullish about the future.
And what can drive margin expansion for you? You've seen margins of 17% going up to even 19% approximately. What are the triggers for margins from here on?
So you think about it, margins, I'll answer that question in two parts. One is, even before I go that, from a financial perspective, we've been always a very robust company, right? Whether it's growth, EBITDA margins, PAT margins, or cash flow generation. If we are EBITDA margins during this period of significant growth you just alluded to, 18.8, 70% growth, our EBITDA margins had dipped to around 18.8. Since then, they have had a northward trajectory. In the 9-month ending December 31st, we did 21.9% EBITDA margins. And our attempt is going to be continue to sustain and grow these EBITDA margins. At a PAT level, our margins were a bit lower, and that was primarily because of a loan we had on our books, which was done. This was taken to do an acquisition in 2022, and of course the interest cost had had gone up over the last few quarters. Now, with this public issue, one of the objects for the primary raise was to pay down this debt. So to that extent, we will have an impact on our PAT margins as soon as we pay off the debt, and they're going to go northwards.
How much higher? I mean, since we're talking numbers right now, Mr. Gupta, let me complete this part of the conversation. Once the debt is paid off, what is the margin headway that you see ahead, and over how much time do you think you'll achieve this?
So our PAT margins are in the region of 12.8ish or so right now. The debt impact itself, the debt impact is more than a percentage point. Actually, if I'm not right, it's around 1.2, 1.3 percentage points. And that's going to be done in the real near term, right? We will be paying off this debt very soon.
Okay. And how much is it in absolute numbers, the debt that you'll be paying off? And, will the proceeds that are coming to the company, crores. 390 crores. Okay, so that will be entirely paid off.
Yeah, absolutely.
Okay. So now let me just dial back on...
off, and the interest cost we have been taking is 30. Sorry,
okay. Okay, got it. So, that's, one large chunk of funds and how they'll be utilized. Let me just, dial back on a couple of other basics that quite a few of the private equity backers of the company, they are also sellers in the IPO. I mean, it's been I think, a partial exit for them. But can you just tell your shareholders what the sort of the PE players' plan is when it comes to Carlyle and Narother Far East? What level of equity have they committed to keep holding in terms of the conversations you may have had with them?
See, first of all of them have a lock-in period, and of course they're going to be abiding by those lock-in periods. But again, going Indegene is a very unique company outside of the management team, which has been a very stable management team for a very long period of time, and is very motivated to continue to grow the company for a long period of time. One of our investors, Narother Far East, as you said, has been an investor for now almost 20 years, right? And I believe they're taking a very long-term view of the business, right? Now, the other two private equity firms, we are really humbled that they, after 3 years, cut down what they're planning to sell in the public issue and have sold lesser than the initial plan. And are taking a very positive view on the company. Now, of course, their plans, specific plans, is something I can't comment on.
Oh, okay. Just very quickly, I mean, I will require far deeper and lengthier conversations with you, and we'll look forward to that now that you're a listed company. Yeah. But just in a nutshell, out of your 3 business segments, if I just look at the breakup, enterprise commercial solutions is the biggest one. Omnichannel activation is relatively smaller. I guess that's where your AI and sort of, deep tech prowess comes in. And there's enterprise medical solutions. Just tell us, which one is going to be the real growth kicker for you? And I mean, will you be dealing more with companies beyond life sciences companies as well? Just the sort of pharma segments that you plan to cater to in the near future.
Sure. So let me first of all to over there that all these 3 segments we bring to fore our deep domain expertise and tech prowess in all these 3 segments. How we bring it, right, and the instantiations are slightly different, but nevertheless, we bring all these capabilities together. We see tailwinds across all these segments, and there is significant amount of domain expertise in tech and growth opportunities in all these segments, and we'll continue to invest in all of them. Now, as far as going into different sectors, at least we don't see that as a we're not thinking about that right now. This industry and the segments we operate in, actually within that, even our existing clients, we believe offer a tremendous opportunity for growth, and we'll continue to put our head down and execute in the segments we operate in for the clients primarily we are working with.
Thank you, Manish, for joining in, and wish you all the very best. Get into a break on that note.